Are we in a Bitcoin bull market? Let's ask the holders directly. So hey everyone, welcome back to Upside Down Data. Today I want to talk about some on-chain data that I think can give us a really powerful insight into where we are in the current market cycle. So here at Upside Down Data, we like to look at a lot of different data. We obviously have our models, which we think are very powerful guides to the market. Check out partydigital.io, our website, if you want to learn more about those. But we also like to look at other data. We talk a lot about macro data and also on-chain data because it also can give us a useful perspective on the market. So that's what I want to focus on today. And what I want to focus on most directly here is the short-term and long-term holder realized prices. So that's what I'm showing you here. So if you're not familiar with these ideas, basically in the kind of on-chain community, there's been this important distinction that's been made between what are called short-term holders, and it's usually defined by people who've been holding Bitcoin for less than, either between around 140, 155 days. Different people will define it slightly differently, but generally in that ballpark. And then also then anyone over that time period, so anyone who's been holding longer than 140 to 155 days is considered a long-term holder. And so the green line is the realized price for short-term holders, the red line for the long-term holders. And realized price just basically means the price at which the Bitcoin changed hands on average for that group. So a realized price is basically if I spend a Bitcoin on chain today, then whatever price Bitcoin was at when I did that, it becomes the realized price of whoever acquired that Bitcoin. So if I spend a Bitcoin and it's currently trading at 30K, then that 30K becomes the realized price for that Bitcoin for whoever bought it. And so really what it's doing is it's telling us about the cost basis of these different groups. So basically on average, people have been holding Bitcoin for less than 144, 155 days, however you define it. On average, what is their cost basis? That's this green line across time. And then same thing for long-term holders. What on average is their cost basis? And so there's useful things that we can gain just looking at these different types of behavior. Basically, the cost bases of these different groups can tell us a good amount about the market and what the different groups are thinking about the market at any given point in time. So one of the first things that you'll notice when you just look at a chart like this is how in all bear markets so far for Bitcoin, it's been the case that the short-term holder realized price has dipped below the long-term holder realized price. You'll see that happen every single time. It happened back here in 2015, happened again here in 2018, happened again here in 2022. And essentially what that's meaning is that as a group, the long-term holders have actually had a higher cost basis than the short-term holders for some brief moment in time. And basically the way that would happen is that there's probably people who are holding Bitcoin from way earlier, from way lower prices, who their contribution to the average is to pull the average way down. But then there are also going to be people, long-term holders, who are holding from some of these higher points. Again, it's only 140, 155 days before you age into that group. And so therefore there are going to be some top holders, some people who are kind of still holding from this point, who then age into this group. And so what's likely happening when you see the short-term holder realized price kind of dip below is that there's a lot of changing of hands going into these moments. And then at these extreme lows, this might be the point where you're really seeing that capitulation out from long-term holders, that to drive price and then to drive the short-term holder cost basis below the long-term, you kind of by necessity need some long-term holders to have sold out from their positions to allow price to kind of break below this average cost basis and for shorter term holders to start acquiring it. Then what happens is that as time goes on, price doesn't spend a whole lot of time down there. And then as we move back up, and then as the short-term holder realized price or cost basis moves back up, essentially what then ends up happening is that a lot of the short-term holders who bought back here, they don't sell as you go through here, and they age into the long-term holder bracket. And so what you'll end up seeing is that the long-term holder realized price kind of stays constant. It stays relatively flat through the early stages of the ensuing bull market. So basically you've traded off people who had their realized price up here, who are pulling up the long-term holder realized price average. You're now trading them off for people who bought down here, and then on average you're kind of canceling each other out. And then there's a lot of short-term trading that happens through here, and a lot of people who may not believe it's a new bull market yet, so they're just kind of doing swing trades. They're never really getting into this long-term holder bracket. And really these long-term holders are waiting until you get to these more explosive moves where you can start seeing them start to sell. And that's what it means when this moves up. It means that people who are holding from these lower prices at these lower cost bases down here, or even from the previous cycle, have now decided, all right, now is a good time for me to start selling. And now you're replacing their cost basis with people who might have been holding from, let's say here, for example, who are now aging into the long-term holder realized price or long-term holder bracket because they've been holding long enough. And that starts shooting the average up. And so when you see a rapid increase in this red line, that tends to coincide with these parabolic phases of market cycles. That's happened every single time, where people start to age into that cohort who have been buying during this rapid moment, and then a lot of the people who had been holding from these lower prices have been selling, which then leads to the average kind of moving up. And that's what leads to this kind of stair-stepping behavior that you see. And so if you look at what's been happening more recently, not only have we seen the short-term holder realized price cross back above the long-term holder, back over here, which again has been a bullish sign every single time, but we're also importantly seeing this line stay flat, which means that we're not getting a lot of these long-term holders who've been holding from these lower prices selling at these levels to start driving this average back up closer to where we are up here. Basically, we haven't started to see that sell. In fact, we're actually seeing the long-term holder cost basis start to move down to some degree, which is probably noted by some of these people having sold as we're getting back up to these levels. And so really, when we look at this, what this looks like kind of behavior-wise is not too different from what we've seen in previous cycles, where you kind of go into the bull market and you see long-term holder realized price really move up as you start going into the bear market. Then it just goes flat for a long time before you see this rapid acceleration. And so right now, it seems like we're in that kind of early stages of a bull market based on this behavior. If we just look at past kind of transitions out of bear markets into bull markets, this is the exact type of behavior we'd expect to be seeing. We can also visualize this slightly differently. If we just go and look at what is the log difference between the short-term holder realized price and the long-term holder realized price. So that's what this white line is here. So basically, the higher this is, that means that the short-term holder realized price is getting really extended above the long-term holder realized price. And then as it falls, they're getting closer together, or in fact getting to a point where the short-term holder is crossing below the long-term. So it's basically just another way of visualizing what this graph is depicting here. And again, this I think really helps to illustrate how short of a time it is that short-term holders are enjoying a cost basis that's lower on average than long-term holders. That tends to be a not particularly sustainable kind of state for the Bitcoin market. It really doesn't like to spend that much time there. And then oftentimes price will then rebound to the upside to kind of get away from that dynamic, having it be the case that long-term holders still maintain a lower average cost basis than the shorter-term holders. That tends to be a pretty consistent pattern we've seen every single bear market for Bitcoin. The exact same thing played out here again. And so, what we're seeing right now is expected to see this rise as the short-term holder realized price starts to move above the long-term holder. And then what we might expect is similar to kind of previous cycles, that things kind of slowly move up, and then you'll get this rapid acceleration at some point in the cycle, and that would coincide with this bull market. So in some ways, the rate of change on this metric is the important thing to watch. When do we start seeing a rapid move to the upside? That tends to coincide with these kind of more parabolic moves. And so if history is any guide, we might have a considerable longer amount of time to spend at these kind of lower difference levels between short and long-term holder realized price before we start seeing that more explosive move to the upside. But again, when we just look at these, what it tells us is that at some point, when you get to a point where short-term holders are kind of getting way above in their average cost basis than long-term holders, there comes a point where the long-term holders decide, all right, now it's time for me to cash out to sell my Bitcoin to these short-term holder people, make my coin leave the long-term holder basket and then let it join the short-term holder basket. And that can continue to some degree as price continues to go up. But at some point then, the demand dries out. Things have gone too far too fast. There's too much selling pressure, both from short-term holders who are looking for a swing trade and long-term holders who are looking to cash out on a much longer-term investment. And that then leads to this kind of drop in price. And then you really start to see that kind of change in dynamic again, where the long-term holders stop spending a lot of people who have been buying up here age into the long-term holder basket, and then you get this final capitulation over here, where a lot of those people who had bought in at the top capitulate out, which ironically often marks the bottom. And so that's kind of some of the different dynamics that are likely leading to this behavior that we can see very clearly when we compare these two different cohorts against each other, these two kind of average cost species. And of course, with short-term holders, their cost basis is kind of by definition going to follow price more closely because it is inherently the longest ago they could have bought was, about 155 days ago or 140 days ago. And so that's where you're going to end up seeing this happening. But there's a lot of dynamics, a lot of interplay between these that are happening that contribute into these kind of big cyclical movements. But more broadly, what I kind of wanted to mention with kind of comparing these two against each other is that what we're seeing right now looks very similar to what we've seen in the past. Again, this idea that there are brief moments in Bitcoin's history where short-term holders will be enjoying a better average cost basis than the average long-term holder, but that doesn't seem to last particularly long. And so it's both a combination of people becoming soon to become long-term holders who are buying at these points, who then get into this band here that kind of keep that down before selling out, and that leads to this big these big swings in the relationship between their cost species. But ultimately, when we look at where we are right now, if we're asking that question, what do the different types of Bitcoin holders tell us about where we are in the market cycle? Well, right now it looks very similar to what we've seen in the past in terms of early bull markets. That as far as where I'm concerned sitting with this, just from this data, from what it's telling me, it seems much easier to argue this is the early stage of a bull market than just a bear market rally that's going to lead us to continued downside, if historical patterns have any predictive validity for the future. So it's obviously not financial advice. You should make your own opinions about these data and what you think you should make of them, etc. And of course, this is assuming that there's no big catastrophe that happens in the broader world or some horrible stock market crash that could derail some of these patterns from being able to continue. But at least so far, everything has been remarkably symmetrical, to the past. And so based on that, on these data alone, again, I think it feels harder to argue that we're still just in a bear market than us being potentially in the early stages of another bull market. All right, so I hope you found that interesting. I always like to kind of to mix up the type of data that we talk about on the channel. I think on-chain data gives a very nice kind of alternative perspective to some of the other things that we talk about, just because it is literally looking at, what is the on-chain activity that is happening. You can just look at it directly. It gives a different perspective than talking about, for example, macro data, which is really separate, from Bitcoin, but of course related because all markets are interconnected to some degree. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. A lot of updates with our indicators and more over there. And then go check out our website, polaritydigital.io, if you want to learn more about our models. We have launched our Polarity Digital Pro subscription service. That is currently $15 a month to lock that in. We think that's an absolute bargain. Check out more about that on the website. Link is in the description.